welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grabner. With me, as always, to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
This is the calm before the storm that is next week. And I'm not just talking about the Christmas holiday or the New Year holiday. We're talking about a week that is jam-packed, full of big USDA reports. And today, not so much.
That's right. It's been a pretty quiet week, and we'll see what we get next week under the Christmas tree.
We're going to talk retail prices today. We'll preview a little bit of what's coming next week. But to kick things off, let's recap what happened this week in the markets.
Yeah, so frankly, it was pretty calm this week, Megan, in many of the markets. We start on the cattle side. Fed cattle prices were basically unchanged on the week. Those feeder cattle markets were by and large steady for the week. There was a few instances of heavyweight calves that were up slightly relative to last week, but really no change. On the future side, the February live cattle futures contract was up 22.5 cents, as was the January feeder cattle contract. So not a lot of change on the future side there as well. Choice box beef price was higher this week, up $9.20. We really had strength across the board, except for ribs when you look at that choice box beef components. On the hog side, cash barrels and gilts were really unchanged this week. The February lean hog futures contract closed up $1.90, and the pork cutout value was up just slightly, up 32 cents relative to last week. Stronger bellies, butts, and picnics offset what was weakness in loins and hams.
I know we talk about, are we just kind of getting into the end of the year lull? We have a short week next, or I guess we have a full week next week, but a short week after that, a short week after that, and then we're into the new year. Is it just kind of like, we'll do what we're going to do, and it's not going to be too exciting?
It sure seems that way when you look at just the lack of movement this week, that folks are just trying to move along here at the end of the year and get ready to celebrate the holiday season.
Most definitely. Hopefully with some beef or some pork products or a mixture of all of the above. Let's talk weekly slaughter numbers as we take a look, really kind of pulled back on the cattle side of things this week.
Yeah, that's right. USDA is telling us for the week ending December 17th, a run of 629,000 head of cattle this week. That's 23,000 head less than where we were last week and 29,000 head less than where we were a year ago. On the hog side, a run of 2.596 million head of hogs this week. That is up 26,000 from a week ago, but 59,000 below the same week a year ago.
As we're talking year to date, we have this comparison that we kind of look through. This will be the last couple of weeks. We'll talk about year over year numbers. Where are we at as we wind down 2022?
Yeah, so year to date on cattle slaughter is up 1.3%, while year to date on hog slaughter is 2.8% below where we were a year ago. And I'll just add, we're going to switch those around come 2023, I think, Megan. We might be up a little bit in terms of hog slaughter, and yet I think we're going to be down pretty hard, especially as we get further into 2023 on cattle slaughter.
Definitely will be a number for us to watch and give us plenty to talk about as we get into 2023. The big report this week, retail prices. Let's talk about prices first, and then I've got some questions.
Yeah. So if we look at what we got for November data, first of all, the choice retail beef price was $7.36 a pound for November. That is 6.2% below where we were a year ago at this time. Interesting mix going on the beef side. So boneless sirloin steak prices were down 10.8% relative to a year ago in November, while ground beef prices were 2.9% above where we were a year ago. On the pork retail price side, for November, it was $4.95 a pound. That's actually 2.5% above year ago levels. Now, a little bit of point of comparison, we started the year here 16% above when you look back at March. So we've been reducing where we were, but unlike beef, where we're actually below year ago levels, we've stayed higher. If we look at some of the components there, your favorite pork component, bacon, $7.24 for November was actually 0.3% below year ago levels. So I'm sure you're enjoying more bacon now that it's cheaper than it was a year ago. And I'll say the chicken composite retail price of $2.52 a pound is 14.1% above year ago levels for November.
I mean, I love a chicken wing, right? But I feel like if chicken composite prices are that much higher than they were a year ago and steak prices are 11% lower, does that mean the better buy is beef?
So I'll leave that up to the consumers to make that exact choice. But I think the point that you're making is a relevant one of when you think about switching around. All right. So I will say, you look at beef in particular here to begin with. I will say, I believe consumers are already making that shift away from higher priced beef products to lower priced beef products. Thus, ground beef prices are higher, yet steak prices are lower. What do you switch to in terms of alternative meats? I think maybe there's less of a switch trying to happen when you got chicken prices still running 14% above year ago levels. Where that moves going forward is going to be interesting. You know, where does high path AI go? We've seen a pretty strong production response to some higher prices on the chicken side, but maybe avian influenza slows that growth as we get into 2023 and could push chicken prices even higher and make beef not seem so expensive, although you and I both know it's probably going to go higher in 2023, given the supply side that will be lower for beef in 2023.
How are consumers? We've talked about this a little bit last week. I'm not saying that like the economy is back on track and we're in a great position, but it's not as bad as it could have been and has held up fairly well despite rising interest rates, inflation, rising gas prices. Things have backed down and kind of normalized. How is consumer spending holding up?
Yeah, so I think we can generally continue to say consumer demand for meat has by and large been still good. Maybe not as stellar as we would have seen a few months ago, Megan, but still strong. And yet you look at the things you mentioned, so higher interest rates, general economy that appears still to be going to slow in 2023, as a couple of things that make me more concerned about meat demand going forward. And I will say we're continuing to push higher prices for these meats generally. Pork might be the exception when you see we're actually talking about, you know, a pork retail price only 2.5% above. But I think we're going to start pushing higher prices at consumers. What's that mean in terms of meat demand going forward? And do we ever hit this point where all of a sudden demand doesn't look as strong as it's been?
How does that? I feel like this brings us back to risk management and a conversation that we got really in depth into last week. And again, if you guys have questions, probably not next week, but we are going to have a slower week, the end of the year, where you guys have a chance to ask questions about risk management tools and utilizing it. But how do producers prepare or to manage some of that risk and that volatility and the uncertainties that we're going to see in 2023? Because I feel like we always talk about things that we don't, the unknowns, right? There's a lot of things that could happen. Foreign animal disease, a trade war, you name it, can impact prices. But we haven't seen it where we've seen price potential and even input prices go this high.
Yeah. So all right. So I like to remind us, risk management isn't about hitting the high. It's about reducing risk. And I think we have to keep saying that out loud. Buying some type of risk management and not getting a payment on it might not be a bad thing. It means in the case of output prices, they went higher. It's just how much risk can your operation afford? And producers need to think about that. Some of them probably are economically in a place where they can manage risk on their own. They don't need to lay off much risk. Others might not have the same appetite for that volatility and need to let somebody else carry some of that risk. So identifying your financial situation, operation by operation, I think is important to this whole discussion, of risk management. I will say, and maybe I'm going to get off track. I'm going to be an economist really hard here for a minute. I'm beginning to see signs that demand for our products is becoming more inelastic. And when I say that, that means small changes in supply gives us large changes in prices, both high and low. Can happen from a more inelastic demand. So when we have a disease event, we get larger price swings. I sometimes think we've gotten used to the last few years of saying, well, we have all these black swan events, and that's what's creating all this volatility. And yes, we've had major disruptions. I'm not trying to suggest otherwise, but if the underlying structure has become less responsive to price, I think we get these bigger swings. I will finish by saying, hey, we want volatility because volatility also gives us high prices. It's not just it gives us low prices. High prices gives us a chance to lay off risk to someone else. So we want volatility. We just don't like it when we don't price at the right time.
You brought up high path AI and you brought up horny animal disease in the same in this conversation. When we're looking at chicken and poultry products in general, is this something that really the poultry industry should probably brace itself for in it to be a annual or a yearly event or twice a year, because we're seeing cases uptick too in the flyways?
Yeah. So it sure seems like we're in a situation where it's occurring more frequently as we go into the winter months. I'm no expert here, but after you see it for a few years in a row, it reminds me to say those events are important to think about in terms of, and these are individual, right? So it's one thing for your operation to break. It's another to talk about additional cases of high path AI. Because if you don't have an outbreak of high path AI, you might be better off because prices are higher. And I know no one wishes on their neighbor a high path AI outbreak while they don't have one, but that's kind of the effect that we see out of these disease events. It's no different than China breaking with ASF. We benefited in this country tremendously from that ASF outbreak. Calling those disease events gets extremely difficult, but understanding that they can have a big economic influence on a operations bottom line, I think is important.
Scott, anything else we need to touch on this week?
I think we should save it for all the big reports and all the great news and big presents we're going to get next Friday from USDA.
So speaking of big presents from USDA next Friday, obviously we have cold storage, livestock slaughter on Thursday, Friday, cattle on feed, and quarterly hogs and pigs. What are some things you're watching in those two reports specifically?
Yeah, so I think I'm probably more interested in seeing quarterly hogs and pigs next Friday. I keep saying I think we might get a modest increase in production in 2023. But if we get the report next Friday and we see some type of expansion trying to happen in sow inventory, that's the one I'm watching. We need some new information, I think, to help us kind of set the stage for where supplies are going to be in 2023. Cattle on feed, hopefully we continue to see tighter placements. That will just continue to cement how tight we're going to get in 2023, and see whether or not USDA is correct that beef production will be down 2 billion pounds next year.
And I kind of glossed over livestock slaughter. Are we still watching to see what cow slaughter is in those numbers?
So for sure, we've probably seen a little bit of move in the direction of less impact of cattle slaughter the last several weeks again. So maybe we're starting to find the end here, but we want to watch because further contraction could continue to happen as we go further out, and we're starting to get some idea of just how deep that hole goes. I think in terms of then how many beef cows do we have? We'll get January 1 numbers here before long at the end of January and set the stage for the cattle industry for a while.
Do you think the size of that hole that's being dug indicates how many come back after some of this liquidation? And maybe that's a question to ponder for a couple of weeks and we come back to it. But I think about how much liquidation we've seen, and is it beyond a point of no return for some producers if drought doesn't improve or we don't, all of these other factors?
Yeah, you ask a really good question, and maybe I'll get us to get people ask us questions when I respond as I do here. I wonder if this changes the structure of the cow-calf industry going forward, that when we rebuild, we're going to see fewer bigger operations replacing smaller operations that financially were fine, but have just chosen now as the time to exit the business. And there's really not the next generation on some of those smaller farms that are going to continue to raise cows. I will be wrong in that guess, but I kind of wonder if this doesn't set the stage for a bigger average beef cow herd on an operation and fewer operations as we move forward.
I think it also begs the question and maybe kickstarts conversations for producers about next gen. How do we transition? What happens when we've made those investments in genetics and whatnot to improve the quality of our animals? How do we protect that moving forward or to ensure that it has a home?
So absolutely. The last thing you want is to have made all that investment in better cattle and then not be rewarded for it. I think there are success stories and there are others who have struggled to find that added value, reaping more benefits for them.
Got lots of great information, great discussion. Hopefully it spurs some more questions from viewers because we're always game to answer them. I mean, Scott's always game to answer them. I will just ask them for you. Scott, great to see you. We will see you next Friday for a very, very big day from USDA.
Sounds great, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for a recap of what happened during the day in the markets, check out John Perkins' Market Minute. Have a great weekend. I'm Megan Revenue for Brownfield.